So, good evening, guys. Uh, hope you enjoyed my previous videos. So today, I want to welcome you to this session. I hope you enjoy this as well. So, basically, this is like a continuation of what I explained in my previous video on US 30. If you haven't seen it, please check it out and see if you can get one or two from the video. Like, subscribe, and comment if you have any questions. I will definitely respond to them. So this is gold, and I would like to explain a few things of gold, just like we've explained on US 30, right? So, like I said, the market is a printer, and it prints the chart, prints whatever is happening in the market, whether it's buyers or sellers, it prints them without uh, whether you are on the trade or not. So today I want to explain briefly on what I've explained when you started, but a little bit, more, I would say flexible. So this is good daily time frame. This is to help you know which direction the market is going for the day, or maybe you're anticipating what's likely to happen tomorrow. Let's assume today the market buys, and when the market closed that day, you're like, okay, what's the possible movement for tomorrow? And you want to know that ahead. You want to have your levels ahead of market open. So this is what the strategy is about. So uh let's get from the top, right? How you could have gotten SL from this stuff, right? So, like we all know, gold has been in a bullish trend, right? So it did this, went up, right, to 4330, and then the following day, which is this bearish candle, the following day the market pushed a little bit higher to 4375. So the high of the high of the previous day before this 17th October, the high of that day, if I mark it, say this is the high of the day of the previous day, I mark the high of the previous day, and I want to see what will happen. So opened, the market opened up. You can see the market's previous day closed here, right? But you need to pick the week. We are targeting, we are looking to pick out the highs of each day or lows of each day. So this is the high of the day. So this is the high of the previous day, right? Right. So the following day, we can see this bearish candle. So how exactly are we supposed to capitalize on this? So this is what we do. So when we see this, we want to see an engulfing into this level. I mean, this is a daily candle anyway, so we want to see an engulfing on lower time frames, like maybe probably 1 hour or so. So if we do that, say let's check the 4 hours. So this is the previous engulfing on the 4 hours. You can see probably the engulfing. Right, the engulfing. So I would say because the engulfment happened on the 4 hours, so we can say probably check it out on other hours. Yeah. So we want to see the time frame that has engulfing. So probably I would say 8 hours. So if I put eight, sorry, excuse me. All right, guys, sorry about that. So we want to use the 4 hours, sorry, 8 hours, yeah. So eight, and we had it. What's happening? It's not supposed to do that because I have a premium account. Right. So, um, so about earlier. So, all right. So we waited for an engulfing, yeah. That's what we're waiting for. So, let's see these 6 hours. I decided to check the 6 hours out. I think it's working out hard to close my trading view. So let's check the 8 hours as we intended. All right, so you can see this is what we intended. We waited for the previous day, right? And you can see that the market actually get an engulfing inside of the previous day. So when this bearish, when this bearish candle closes inside and engulfs inside of the previous day, we sell, right? So this is what I'm trying to say. Sure. I sell it and put stop just above here, right? And you could get this 5 to 1. That's actually a very huge risk, right? But it didn't end that way. Even if you go into this and your stop is this massive, about 770 pips, that's honestly, that's too much. I mean, no one would want to risk, even on the lowest lot size, 0.01 would literally be eating up $77. That's a lot, right? So, how do you do this to kind of like get in? I mean, this particular day, there's nothing you could have done. That's what it's printed. I mean, that day alone, it gave about 136 paid. Sorry, $136 means that's about 1,366. So that would literally give you 1.76. That's the risk to reward. So that's not the case. I'm trying to explain. If you want to take it, you can take it. It's fine. Yeah, even I would have taken this, right? But I would have actually minimized my risk, like not make my risk too much. So if I was to risk like uh what's it called? Say I want to use like a standard lot and then risking about $7,000 on the trade. That's massive. But given that gold has actually been going, frankly, to the upside, I might be skeptical to just take 30,000 profit. That's like 2 to 1, right? But that's not the end, right? So let's go back to the daily time. Yeah. So the day, the day the bearish candle happened, the following day, this day, the market actually went up, right? It went up and it kind of like traded above the previous sell day, but you can see you try to check it out, it kind of like traded above it, right? You can see that week, right? So this is what I do for something like this. I just wait, make sure to see what's happening and how the market is moving, right? Because the market actually sold and then reversed the previous day, and then the following day it started buying to the upside, and it got here almost close of the day, I think. Let's check it out. Almost close of the day, correct? So the market actually rose to that high, right? You get me? So it rose to this high, and you can see the engulfing that happened here. And what's funny is that the market actually like went on top it and then started selling for the day. The engulfing is actually quite large. So this is a 4 minute. If I do it on the 1 minute time frame, let's say I think we could have gotten a little bit of entry right there, like more minimized risk entry. So always make sure that when you're getting on history, it's around, the time you're entering is actually very, crucial as well. It's very important. You have to check the time. I'll explain the time soon. Okay. So let's just focus on this first and see what happens. So I think it's actually almost the same. You can see market tapped it, engulfed here, and then entry there. That's about 100 people, but that's still crazy. That's crazy. So let's see, 2 minutes. I'm waiting just to see the engulfing. That is not too much. So I'm just trying to check my risk. Okay, I think we're going on the 2 minutes. I think so. I'm not sure, but let's see. Oh, it's not there. It's not there. All right, so we just have to, check every time frames and see where an engulfing happens, and try as much as possible to see if you can minimize your risk. That's actually important as well. So I'll just go with this since it actually explains what I'm trying to say. So we tapped the high, we've tapped the high of the previous day, right? And then it goes back inside of the, the new day, right? This is the new day. We tapped back inside and we started selling to if we had to wait to get on trade, so would say maybe yourself here after the coffee and have a stop of this. I think there's a time frame that gave us about 100 pips the other time. Let's check it. I think it was 4 minutes. Yeah, 4 minutes. Oh, it's the same. It's the same. It's the same. All right. All right. So this is how it works. Now, with Sydney and golfing, right? You can just take yourself and have yourself above that eye. That's about 200 pips, right? Still better than the 700 pips that we had previously, like the previous day, right? So now you can, another thing you can do is to wait, make sure your entry is around, look at the time, that's about 9 p.m. It happened 9 p.m. Right? So you have to make sure that your entry happens between the first 20 minutes of every 1 hour candle. It doesn't matter. You can pick it on the lower time frames, but make sure it's from the first 20 minutes of any 1 hour candle. It's very, very important. Right? So you've gotten here, you got in by 9, by on the dot, and you continue to hold the trade for the day because it is engulfed inside the previous day. You only expect it to continue selling for the day, right? So that's it. So that's it. Let's see and go back and see where our point of interest for uh, should be. So this is it. Go back to the daily. I want to make sure that this is expanded. Right. So we go back to the daily and see where we can put our take profit. So now that we've gotten this entry, you can see the second day the market actually went a bit up. Right, this is the day we go in on the sell like the, that's this day, right? The market has actually fixed our entry. We've gotten in before market closed, but for that day it sold, and the following day the market tried to go back and kind of like hit our stop. But since this happened, this happened the previous day, and it didn't really move much. It just moved a little, yeah. So what we have to do is for this next day that showed every day, what we have to do is to go back and look for an engulfing right inside of this level, right? You can see the level from where our entry point is to where our stop loss zone is. So what we need is to just look for an engulfing inside that level to kind of like get on the trade and continue selling for that day, right? So this is just a confirmation that the following day is going to sell. So sometimes it might just go up and take us out and then form a new day. Probably just take this previous high out and then fall back inside. So it happens, it can happen. That's just how it works. But if you really want to try it out, just being plain and being transparent with you because it has happened when I traded this as well. So sometimes when I take a trade and the previous day is not really volatile again, it just stops. Like it stops halfway. It's not really far from my entry. You can see I only go like so I got in 63 and then it only traded back to 56. That's about 90, 56, so 57 at about 60 pips. So I'll just say like 80 pips, right? That's about 80 pips, right? So I only go about 80 pips, and then the market closed, and then it closed, it opened up here, and I had to look for an engulfing inside of that level for the day to see if it works. So that is going to be more like a more simple trade. I just need an engulfing, and my stop will be above the engulfing. That's all I need. So, and remember that it has to be like it has to be around every 1 hour, yeah. So you can see every trade that happened here, there is no engulfing that is valid. So I just do this. I move through all the time frames to see which one actually has a nice engulfing before the trade. So I think not so sure. Uh, Not so sure, but I think there's one here. All right, so there's one here. So, okay, so you can see, so the 2 minutes, we wanted an engulfing, and then we got an engulfing. So for this, I would just slightly move my entry here, right? Because this is the only engulfing I've seen so far for today. So I'll just put my stop above here, right? After my stop above there, that will give me, I don't know, that's about 90 pips, 380 pips, right? That's not bad, considering I had just 180 pips. So because the point is the market actually traded above this engulfing and then takes out this high, it becomes invalidated, it starts going up. That's just it start going up, then it will take out this stop loss for previous day and then now probably engulf back inside and then start selling. That's just it. So now we go back to the flowers and then we can see the structure, right? And from the flowers, you can see it engulfed and it starts selling heavily. And we can now put our TP here. So we look for the low of the previous day where market can actually start to buy from. So which is this part, this part. So it's about 18 hours here. So that's how you can have gotten this cell. So now that's that about that. Let's go to what just happened previously and see how you can actually profit from it as well. So currently you can see this is it. The market is buying. We've got a low here. We've got this low, and the market is trading above it. The market has come to tap it, trade it above it, look for an engulfing back inside a level maybe 4 hours. No engulfing, no significant engulfing, right? But what you can do is say maybe 6 hours, no engulfing still, 6 hours, no engulfing still. Okay, maybe we're going to engulfing here, right? But this is actually too much, right? I wouldn't take it. I just want to see an engulfing, this bullish candle. I want to see an engulfing instead. So I would wait and wait for the second day and see what happens. So for the next day, the market actually, went up, and you can see this is a sell trend, right? And you can see it has a high, this high, right? So we want to see what happens, how market will react from this high. Look at it, this high, right? Want to see how price will react from that. So you can go to smaller time frames like 30 minutes and see. So this is the high. Sorry. So this is the high here, right? You can see high of the previous day. And we want to see an engulfing, right? That's what we want to see. So we can see 45 minutes or 1 hour to get an engulfing. So we got this engulfing, right? After getting this engulfing, we then sell. Wait for price to get back and sell. So that's about 180 pips as well, right? 180 pips. And you can see, uh, go back to the daily. So go back to the daily. So you can see, initially after saying this and after getting in, I would literally just pull my TP here, this low. But you can see pricing get there. I mean, honestly, I always tell people that you don't want to be right, you want to make money. This much is enough for you to get out of the market. In fact, 5 hour trade like this is enough for you to get out because it will take you, since you know on average your stop would be around 100 pips, to take you on average, say 5 trades to lose what you've made from this trade if you continue to maintain your risk on every trade you pick. So that's why you can see this is about 980 pips, right? So for today, how I got this sell today. So I picked this high, right? I picked this high, and then I saw that they actually have an high here, like a high. And so I picked this instead. I mean, it all depends on how market react to them because this market, the pricing react here is just pushed up and went above this level, went above that level, right? So what did I do? I wanted an engulfing, so I waited for it. So here today, I didn't quite get an engulfing on the 1 hour. I think it happened on the 3 hours. Let's see. Yeah, it happened on 3 hours. So on the 3 hours, right? I got this short, right? But you can see quite well that my store is huge, and I only got about 1 to 1. Right? And it reversed back inside of that level of daily, right? It engulfed here because I'm someone who would like, I would love to get like, say, small stop loss, small risk. So I decided to go on the 1 hour and I started like taking every little height that I see because I believe the trend, the directional bias for that day, for today is actually sell. So what I did is I saw this price was approaching this level again. So what I did is I then marked this high. I marked every high. I marked every new candle highs. Like, okay, let's see what happens. Let's see what happens. I think I marked here. The market showed a bit, and then this might be and then went back up, right? Then I decided to try this, and then it worked. I got about, I think, two 210 pips, I guess. Yeah, 210 pips. So I got this, and I got this as well, right? I'll show you how I got this level. So I got this, and if you go on the 2 minutes, you see how I got that. I waited for the engulfing. I think it's on the 4 minutes. Sorry, get the time. All right, so I'll go here. So I call this engulfing, and you can see, like I always say, always make sure the time is before 20 minutes, like between o'clock to 20 minutes of every 1 hour candle. So the market tried to sell it was selling, and you can see the time, that's 8:11, and it's 12. The market engulfed that high. I'm waiting there for the pushback because of this level, because of this low level, right? because there's no how market will definitely react a bit and probably just push it up a bit for me to enter here. So when I got there, and then placed my positions, and then I sold and put my stop just up here, and I got about 20 pips risk, right? And I go like 210 pips reward. That's how I got this trade today, right? And after this, I decided, okay, what's next? Because I'm someone who would not want to catch the full move. I just want to cut my trades into pairs so I can capitalize my profits and maximize my portfolio. And maybe when I see a nice trade, it becomes easy for me to risk more, maybe add an extra 2% risk from the profit I made earlier and on the next trade. But if I did not close this trade and I was waiting for price to keep going down, it would have reversed back and then I'll start looking for next entry. But what if that entry is stop loss? How am I going to cover up for that loss? But since I've closed this, it's easy for me to, have more positions, take a risk, and not be skeptical about my positions because clearly I've made profit from it. So you just have to take the trade. Okay, so I like to go back to the 1 hour, right? And I sold this. I can't remember. I think it wasn't that this year. The 15, and I picked this trade from somewhere. Yeah, I think it's here. So, so why I picked this trade? Let me show you again. So on the daily, this is where the level is. So the level is here on the daily, right? Right? That's where it is. So on the 50 minutes, the market then engulfed. So the market got there again on the 50 minutes. You can see the market is there again, right? So I want to see price go above it. So I marked this eye. I marked that eye to see price straight back inside the level. Okay, so I then went back to my lowest time frame, which is 1 minute, to get this trade, and I waited for an engulfing, and then I go in here. You can see the market engulf. Even though I got in here on I think 4 minutes, I got in here, then the market came back, and then now engulfed by 1:14. You can see the time. I always make sure that's why I said always make sure that you enter because around when you enter before, like around the first 20 minutes of everyone else, you tend to see the real move happen very fast instead of waiting and waiting. If you enter a position like this, say maybe 30 minutes after, you'd have to keep waiting because the market might end up going to hit your stop. So you have to make sure your time is around the first 20 minutes of 1 hour candle. So it's easy for you to get in on the position. So I got in here, right? And my stop was just above here. It's about 50 pips, yeah. And then I was targeting the lows. I targeted this low there. Yeah, right. So that's about 6 to 1, even though it later went lower. But the point is that I'm making profit, capitalizing, increasing my risk, adding to my positions, and are able to make more because the market is not your friend. So you have to just take your opportunities. And that's exactly how I caught today's trade. And I hope you enjoyed this session. I hope you understand this session. If you don't, like, comment, and I will definitely respond to you. If you don't understand, I'll make more videos on this. Anyway, I hope you enjoy it, and I wish you good luck and good trading. Please do remember to subscribe. Remember to invite your friends. Remember to subscribe. Tell them to subscribe to get more educated videos like this one. I promise you it will change your trading, and I wish you good luck and good trading once again. Thank you.